Hi there, this is Michael McElroy, NMLS 469150. I've been originating home loans for the last 23 years. Recently, several realtors and colleagues and even customers of mine have been asking me to explain what is a hot topic right now, rate buy downs, both permanent rate buy downs, temporary rate buy downs. The reason it's a hot topic is because the rates are at like a 23-year high right now, higher than what everybody would like. Okay, so it's coming up a lot. I'll do my best to explain it in layman's terms. I'm just going to use a generic example for discussion purposes only. These numbers are not quotes by any means. So let's go with like a $100,000 home. And let's say you're buying it with a $100,000 home loan. Okay. First, let's go over permanent rate buy downs. First of all, what is a point? What is a 1 point buy down? Or what is a discount point? What does that mean? Well, 1 point represents 1% of the buyer's loan amount. So in this example, if your loan amount is $100,000, 1 point or 1% of that is $1,000. That's a fee assessed at closing. That $1,000 is paid either by the buyer or it could be paid by the seller. Okay, and if it's paid by the seller, it would have to be negotiated for the seller to agree to pay for that. The seller is not obligated to pay for that unless they agree in a negotiation to do so. If they do, it'll be written into the contract that they've agreed to do that. Okay, so let's say the market rate today, let's say it's 7.5%, 30-year fixed. Okay, so in this example, let's take that 1% $1,000 buy down that's optional. Okay, whether the buyer is paying it or the seller, doesn't matter at this point. Let's say the rate is 7.5%. If we apply that 1 point buy down, on average, that 7.5% permanent rate, 30-year fixed, would come down to say 7.25 or 7.25. So if you wanted to buy it down 2 points or $2,000, that rate may go down to about 7.0, sometimes more, but that's about on average. Okay, so that would permanently buy the rate down to 7.0 instead of 7.5. So your payment would be based on 7.0 as opposed to the market rate of say 7.5. And that's permanent over the life of the loan. If you ever pay that loan off or refinance at any point, you don't get a refund of that $2,000 that bought the rate down. You hope to recoup that money over time as a result of the lower principal and interest payment. Okay, so now there's that. That's what points are. Discount points, that's how they work, and that's what they do. Okay, now there's another scenario called temporary rate buy downs. Okay, it's totally different, but they can be paid by the buyer or the seller just the same. But let's take that same example and let's have our market rate at 7.5%. But on the 2-1 temporary rate buy down, let's estimate the cost to do that is say $3,000 estimated. Okay, so let's take that $3,000, and what that's going to do, instead of buying the rate down to 7.0, and like the last scenario, the 2-1 buy down, that $3,000 would buy the rate down temporarily all the way down from 7.5 to 5.5, 2 full percentage points. Okay, so then the payment for the first year would be based on 5.5% for the first 12 months. Okay, and then the second year, the second 12 months of the loan, your payment would be based on 6.5%. Okay, and then if you still have the loan at the end of the second year, the rate would go to the original market rate of 7.5%, and it would stay there fixed for the remaining 30-year term. Okay. Now, what happens if you refinance or pay the loan off during that first 2 years in the 2-1 buy down program? Well, that $3,000, the whole time it's the lender's holding on to it, and it's the buyer's money. It stays with the buyer. The lender takes that money and it's using it to subsidize the payment that first year of 5.5%. It's held in escrow, and it's the reason, and the payment's being subsidized by that month by month. Okay, so if you refinance, say in the middle of that, you're going to have money left over in this escrow account that's subsidizing your payment. Okay, what happens to that money if you refinance the loan and pay it off? Well, the good news is it stays with the buyer, So it gets credited to the buyer's loan. The permanent discount points don't work that way, okay? Temporary does. You get credit for the remaining balance, which can help in paying the closing costs on a refinance scenario. Okay, so there's two different permanent rate buy down, 2-1 temporary buy down. Now let's talk about a scenario where you could do both. Okay, how does that work? Well, in most cases, the seller is allowed to pay up to 6% of the sales price towards a buyer's closing costs. If it's a government home loan, it's 6% in most cases. Okay, that would be $6,000. If it's a conventional loan that you're getting, the standard is 3% of the sales price, which would be $3,000, unless you're putting 10% or more down on a conventional loan, and then that 3% max goes to 6% in that case scenario. So for this example, let's just go with 6% because that's going to be the case in most cases. So let's say that you're the buyer and you've successfully negotiated the seller to pay 6% of the sales price towards your closing costs. In this example, that would be $6,000. Okay, now I, as the lender, can offer you to do two things. We can take, let's say we take half of the $6,000 and we do a permanent rate buy down. Let's go back to our same example. Okay, the market rate was 7.5%. Let's take half of that $6,000 that the seller has generously negotiated to concede at closing towards your rate buy down. We'll take $3,000 of it. Let's buy the rate down from 7.5% to 7.0. Okay, that's permanent over the life of the loan. Let's take the other $3,000 and let's participate in the 2-1 buy down as well at the same time. Okay, so now our 7% permanently bought down rate goes to 5.0 the first year of ownership, and then 6.0 the second year of ownership, and then it would be 7.0 if we still have the loan at that point over the entire life of the loan. Okay, so that's kind of a best case scenario if you're a buyer trying to afford a house right now in this market. So I hope that makes sense. And if you have any questions, I am licensed in 40 out of the 50 states. I am happy to help you. My information is on the screen. Feel free to reach out with questions. I'm always happy to help. Thanks and have a great day.